Everyone. Hope you have a good day. So today is August 10th, 2022, and today's market review is going to be very simple, very quick, because it was pretty much a stagnant day in the market for me today. There wasn't really an entry available for me to get involved, but there were some potential setups that I can show you to demonstrate the logic that was behind each potential trade, and hopefully can serve its purpose into helping you continue study your ICT concepts as I am myself. So yeah, let's hope this video serves for that purpose. Okay, so let's get started. So to begin with, I was looking at my daily chart here, my SMT, my Smart Money Tactics, or what's it called? And I was looking at the daily chart on all S&P 500, US 30, US 100, and I noticed that everyone was making a lower high. So I thought today was going to be a bearish day. So this is what I saw this morning. I saw that this 8-hour fair value gap was mitigated, and I thought to myself, well, I see another one down here. Because our theory is that we're going to have something bearish today, my forecast for today was going to be that we were going to have something like this, reflecting off this fair value gap, because I ended up spotting another one just up here, and then using that to spring ourselves down to create these lower prices and pretty much target here for the day. All right, that's what I thought it makes sense, because we were also initiating out of this Asian range during London session. So I thought this was going to be our Judas to bounce off this FEG and to take it down lower, but that's not what ended up happening today. As you can see, price around 8:30 today. We had big news. I forgot what it was, but it was really high impact, and we had this big move to the upside. So I really had to reevaluate to see what kind of potential agenda the market is trying to make today. Lately, I've been studying about trading the key zones, so creating a narrative that's based out of the sessions that happen throughout the day and how they can be incorporated so that they can create the daily candle. But today is one of those special days, I guess, because I couldn't really make out a story. I'm still trying to learn this stuff for myself. So on some days it's going to be a non-trade kind of day, and that's pretty much what happened to me. However, I can show you some of the potential setups that I saw here develop and see, so I can share with you the logic that I was going through my head as I was trying to get involved in these markets. Then I saw into my SMT again and noticed that both SPY and NAS were making lower highs while the US 30 was making higher highs. So I thought to myself, maybe price still wants to create higher highs. So first of all, when price made this expansion during the New York session, it created a range in itself. So I was looking for a mitigation, for price to create and create costs for it to bounce off an FEG in order to take it for higher prices. But let me see here. So in the 2-minute time frame, I was seeing one range here develop, low, my high. And then thought to myself, okay, so then let's wait and see what kind of reaction we'll get in this fair value gap right here. So when that happened, when price reacted off this FEG, here's what I noticed. We had this long-term high, long-term low here develop, but a fair value gap got rebalanced. Then so was my intermediate high, broke structure out of this intermediate high. So I got my OP. This was the last selling moves before the big up breakthrough. When I found my fair value gap here, that was going to be my entry. However, I noticed that when price decided to mitigate back into this range, it broke structure here. So that's pretty much one of my rules, if you will, that if it breaks structure before it mitigates into my fair value gap, then I'd rather just cancel it, because that just gives me signs that market's probably doing something else. Keep something else in mind. And fortunately for me, as soon as I canceled it, price went down to lower prices, so that could have been a losing trade. But yeah, my rule saved me. Okay, and then later on, price made another range here, swing low, swing high, had another fair value gap over here. This is the fair value gap, got rebalanced here. So I thought to myself, okay, this is going to be, remember, we're looking for costs for higher prices. So here we have an intermediate low. And then we saw another low here develop. This low is our short-term low. So all I needed now is for price to break up to create our OP, which it did. And here's our OB. And mind you, this is happening in the 5 second chart, so things are very quick. I don't really have time to mark it all up. I just have to see it. Again, another reason why I didn't get in is because it didn't really follow my conditions. I would have really loved if this OB was mitigated from the discount zone, but it wasn't. Instead, it chose the premium zone. But yeah, so didn't get involved in this either. And look what I ended up doing. Pretty much went to almost touch the range's highs, but it didn't. So we used that as resistance, I guess, to create lower prices. And while all this was happening, I was keeping in mind the higher time frame agenda. I noticed the following. We have this range here, swing high, swing low, and we have this intermediate high right here. Then I thought to myself, what if price is creating costs for lower prices, right? Even though in the SMT we were still looking for something for higher prices, I thought that in the meantime I could catch a quick scalp to sell. And I noticed that when price was creating all these fake little swing highs that I was trying to get involved in, I noticed that this in itself is a short-term high that uh, got got broken through. So I have my OB. This whole red box represents my OB. But I thought to myself, when price creates this range here, I'm gonna get into this FEG and sell it down lower prices. And that's kind of what ended up happening. However, I didn't really get involved in it because I would have really loved the price to come into this premium fair value gap to get it down for lower prices. But instead, it went on the discount. It sold on the discount, so it wasn't anything for me to pretty much do. So I went back to my original plan. I said, okay, you know what? Let's double check our SMT, and price is still creating lower highs, and the US 30 is still creating higher highs. So I was still okay. Maybe price is developing a different story to create cost for higher prices. So then I waited for price to give me cost to do that. So here we have another range. We have a swing high, swing low, and in here we have a very nice imbalance. So in this fair value gap, I wanted price to give me a good price action to perform costs for higher prices, and it did. So this one right here, swing high, swing low, was created fair value gap. It got rebalanced with all this price action right here. This was the creation of the intermediate high broken through. And then another rule that I have is for when price breaks through the intermediate high, I would love for it to immediately rebalance the FEG before we take it up for higher prices, but that wasn't the case. Instead, it broke through the higher time frame. It broke through the long-term range for me. So for that reason, I was out. I didn't get involved to this trade either. So lucky me again, I guess, because it just went back down and could have actually stopped me out if I had held that trade open. Then here's where the trade of the day could have happened, but I was kind of confused at the moment because I was getting all these price entries that were not being respected nicely. So psychologically speaking, I was getting kind of exhausted seeing my setup perform, but not getting what I want. So when I saw this entry, this range right here, swing high, swing low, happen with its fair value gap rebalanced and broken through, I thought to myself, oh man, this probably is not the one that's going to work. And it did, because look, once it rebalanced and broke structure and we created that range, look over that nice fair value gap. Here I had to dig into the 1 second, to be honest with you. I'm not even joking. I had to say to myself, like, no way, there has to be a gap here. And there was right here. You see this imbalance with a gap? That was our entry right there on the 1 second. But when price mitigated, this would have been a nice trade, a nice 2.5 RR trade. But at the moment I was confused, so I didn't catch it. And look, this could have been the trade of the day, because when price mitigated off that, it just kept going for higher prices, higher prices, higher prices. So that's too bad, right? But again, what are you gonna do? It's not like you can go back in time, right? And in the meantime, I thought to myself, well, like, I guess that kind of makes sense, because in the S&T, we're looking for calls for higher prices, right? US 30 is the only one making higher highs. And on top of that, we're on a discount zone. So any form of reaction off an FEG, I would like for it to happen on a discount area. So this whole area right here for discount, you have a fair value gap that created a nice reaction for costs for higher prices. And no duh, that could have been the trade of the day. I could have targeted, these highs, or like as I said before, uh, I targeted a little bit before the -1. And this could have been a very nice trade to hold on for a while. But then again, you have to recognize where we are in the story, right? We're still approaching, what is this now? 10:40. So now we're approaching the London close. So I mean, what's really the high probability that we're gonna keep going up for higher prices before the end of the day? So this is what I mean by when you study ICT's creation of a narrative. It becomes you have to become very reasonable with yourself as to how far do you really is price going to go. Uh, yeah, it's very interesting. I'm gonna continue to study the the narrative structure, the narrative building of price. So yeah, I'm very excited how that's gonna go. But for in the meantime, today we had a very special day because, as I said, price had this very long expansion during the New York session, and everything just became like what I like to call the thorn bushes because everything was just very zigzaggy. So it was a very tricky day to trade today. If you got into a profitable trade, I clap for you because you definitely are you definitely know where to get in. But so for me, right now, I didn't really get into much. Didn't get into any, and the one that was profitable, I missed. So you know, uh, at the end of the day, I still have my capital. I still defended it. I still protected my account, and I think that's very important to have as a disciplined trader because, like I said, there are going to be some days where you're just not going to have a setup to go by, and you shouldn't feel bad about yourself because at the end of the day, we're traders. We're supposed to be um, mitigating our risk. We're supposed to be managing our risk. So if there's some days that you just can't catch anything, so it's totally fine. You still have your account at the end of the day, and you didn't lose any money. So there's that. Okay, so future forecast. What I think is going to happen for the rest of the day is perhaps we're going to continue maybe having these higher highs develop into probably reaching into 134.78. So you know what? I'm going to add an alarm for that. That price crossed up to that. I'll check and see later on the day, or I'll check again tomorrow. But for right now, I'm going to go back into study mode. And yeah, I hope you had a fantastic day today. Hope you got something profitable. Very challenging day. Okay. All right. See you in the next one. Have a good day.